So if you guys want to learn how to trade options, purchase my ebook located at worldly41.gumroad.com. And basically, how did I make $1,265 just trading a couple of Google put options? So basically at 1449, let's look at Google at 1449. And let's see, on the 30-minute time chart on 319, 1449, 1449. Yeah, okay. So 1449. I bought put options. Okay, so this candle right here. So, let me see. Why did I buy put options here? I think I used the 4-hour time chart, if I'm not mistaken. But let's see, 319. Okay, so basically what I did, was that I saw that, okay, if you look back at the chart of Google, right, ever since, I guess you could say the 5th of ever since the 5th of February, Google's just been in a downtrend, right? And so taking that into consideration, right, wait, what is this thing at? Okay, here, 319. So right here, right? So basically you could see that, okay, Google tried breaking the 50-day moving average here, it failed. Google tried breaking above the 50-day moving average like around here in March, right? It completely failed, right? And so when I saw that on the 19th, right, basically I took that into consideration, knowing that, okay, Google's just been, getting rejected by the 50-day moving average. And so if that's the case, if it's going to approach the 50-day moving average, I'm going to buy a couple of put options of Google as soon as it, approaches the 50-day moving average. So I bought in this candle right here, the 16 candle on the 4-hour time chart. So when Google approached the 50-day moving average, I bought my put options on Google there. And then basically all I waited for, for what to happen was basically I just waited for Google to see like a slight decline after Google getting rejected by the 50-day moving average. So within that same candle, I sold out the position at 1555. So when I sold out the position, I made $1,265 just trading 46 Google put options. So basically, you kind of want to I guess you kind of want to recognize the trend that specific stock is in, right? And from what I've observed is that basically you can use the 30-minute time chart to kind of observe the trend, but something that I've realized is that if you use the 4-hour time chart, it's a little better to kind of see where that trend, where that stock is trending. Is it an uptrend? Is it a downtrend? And basically you can kind of see the resemblance of Google being in a downtrend ever since it broke below the 180 and 200-day moving average. And then you can see the following top three moving averages, the 9, 20, 50, cross over the 180 and 200-day moving average. And then ever since, it's just been, Google here tried breaking the 50-day moving average. It tried breaking the 50-day moving average here, here, And I guess you could say here too, because then if you waited a couple days and bought put options, you would have made a big gain if you had waited. Because look, Google just couldn't hold being above the 50-day moving average and got rejected by it, so Google decided to go down. And then you can see here where I bought Google, right? It got rejected by the 50-day moving average and slightly went down the next following day. So basically, I guess you could say the 4-hour time chart is probably the best time chart to see where that specific stock, what trend it's in. So if it's in an uptrend, downtrend, the VIX actually did pretty good today. On the daily chart, it's above the 180 and 200-day moving average currently, but today it tried breaking the 50-day moving average but got rejected by it. On the 4-hour time chart, it's kind of exactly on the 9-day moving average, but not really, because it reads 1833 and the 9-day moving average reads 1844. So there's this possibility that with these upcoming tariffs, that we're approaching April 4th, right? There's a possibility that the VIX will probably see a spike these upcoming days. Meanwhile, we'll start seeing the market probably tank, since we're approaching those days of April. Was it April 4th or April 5th tariffs? Either both, right? But basically, the market is probably scared that this is probably going to affect the market. Not even, I guess the market, but overall, like us, the consumers. So if the VIX decides to use the 9-day moving average as support, it's probably going to see further uptrend, and it's probably going to use it as support and bounce off of it. The SPY, you can see that SPY on the 4-hour time chart. Let's see. Ever since the 24th, it's just been in a downtrend. SPY, it's been in a downtrend, and basically you can see that at one point SPY tried breaking above the 50-day moving average. It failed, and then here it got rejected by it. And then if you would have bought here and just held it out, I guess you could say, all right, and sold out, you could have sold out here and you would have been in the green. But basically you can see that I guess you could say the SPY hasn't really approached the 180-day moving average at all, but you can kind of see that, okay, the 20-day moving average was now above the 50-day moving average. So that kind of meant that SPY was trying to change its trend direction, but I guess you could say it failed, because now the 9-day moving average is below the 20-day moving average. But we'll have to see what happens tomorrow, because currently the SPY is above the 50-day moving average on the 4-hour time chart, so we'll have to see what happens tomorrow. So that's pretty much it. I do feel like maybe there's a possibility that if the VIX is below the 9-day moving average currently, then we'll start seeing SPY go up, because SPY currently on the 4-hour time chart is currently above the 50-day moving average. So we could see a slight bounce from SPY, but considering that these tariffs are approaching, right, the April 4th or 5th tariffs, we'll probably start seeing the overall stock market tanking again, maybe, but who knows. That's pretty much it. I'll see you guys in the next video. As always, take care, and hopefully you guys did well. And as always, take care and bye.